Great. I'd like the panel members to to join us up. So I want to welcome everyone to tonight's event. My name is Frank Milone, one of the founding partners of FML. FML is just a full-service regional accounting firm that's really a primary sponsor of CVG and also just a strong provider of services into the venture capital-backed market segment, including a lot of technology companies that are serving into the financial services sector, which we'll be talking about today. So we are talking about financial services. We are going to talk about technologies that are serving the financial services market segment. Connecticut has always been on the cutting edge of the financial services sector. If you think about the Hartford region, you think about the insurance capital, great companies like the Hartford, which has been gracious enough to host us tonight. We have Aetna, we have the Phoenix, we have Hartford Steam Boiler, just creating a whole host of information and industry knowledge here in Connecticut. And now we have technology companies that are being created in Hartford and in Connecticut in general that are serving into this market segment. We have well-known companies like Open Solutions, which has now become a part of Fiserv. We have companies like SS&C Technologies, which continues to create great growth and earnings trend. And then we have new companies like Hire One, down in New Haven, which was a growth company that ultimately became a public company through an S1 filing. So now we're at the point where we have new emerging companies that are trying to take advantage of all of this change in the industry, and we have them well represented tonight in our panel. And we're going to talk about some of those changes that are happening both in the industry and the market segment, but also in the technology that's really driving a lot of opportunities for new investment, new companies to take advantage of. There are a lot of recent trends, changes, and opportunities. When I was preparing for it tonight, I could have spent days, quite honestly, trying to learn all about it and get educated enough, but that's why we have the panel, so I'm going to throw those topics out and have them talk about it. But there's regulatory issues, Dodd-Frank, and the creation of what I did not know was the Consumer Financial Protection Bureau that I believe got spun out of Dodd-Frank, if I'm not mistaken, and all of the changes and challenges that creates in the industry. And then there's a new wave of technology that's right on the edge of being integrated into this industry segment. And I want to name a few items that we may talk about tonight if the panel touches upon them. Bitcoin-inspired distribution systems, open APIs as a new way to consumer business service on the internet, crowdsourced identity schemes, open source hardware and applications. These are some of the areas that I know very little about, but I'm hoping my panel knows a lot about so we can talk through some of those areas. So how can traditional industry players play in this and change an environment? How can they take advantage of it? How can new companies like some of the ones that are presented here help companies take advantage of some of these trends and changes? We're hoping to find that out this evening. So what I'd like to do is have each of the panel members spend 3 minutes, 5 minutes, introduce themselves, introduce the companies, how they're interacting with the subject matter tonight, and then we'll drop a couple questions and topics into the mix. And hopefully this is interactive. We like when the audience gets involved, ask questions, participate, please. That's why we're all here. And then we'll go back to networking. So I'll start off with, go right ahead. Yeah.
My name is David Vogel, and I'm the COO and CFO of CashPath. CashPath is a Stamford, Connecticut-based company. It's founded by a classmate of mine from business school, John Ventura. John and I are classmates from Tuck Business School. And I have joined forces with John recently. He's been working at this for a couple of years now. And the idea is pretty simple. It's, most of us, probably all of us in this room, but carry smartphones around. And the notion is to be able to aggregate all of your financial activity in a very simple, kind of seamless fashion, and to be able to present that on your phone, on a smartphone. That's where we're starting this as an app. And to be able to use some smart algorithms about predicting cash flow so that you can get a better sense of kind of where you are. For many people, Weight Watchers is a good example where they like to kind of keep track of where they are on their caloric intake. This would be a very easy on-the-go application to kind of keep track of your spending and so stay between the bounds of your savings and your fixed income, your fixed expenses on a monthly basis. So we're in beta right now with this application. There's a lot of concepts that are being discussed tonight by the moderator that play into the themes of this emerging technology. One of those would be that we're using our cell phones, our smartphones for more and more applications, and this is just kind of taking advantage of that trend, and it's purpose-built on top of the smartphone. So my background, very quickly, I'm a Tuck business graduate. I've been doing a lot of kind of corporate development work when I came out for some large enterprises from large companies, merger, acquisition, and restructuring activities, and then I went into the venture business, and I ran a couple of venture funds myself, and I've really enjoyed kind of rolling up my sleeves and working alongside the entrepreneurs that I've had a chance to work with. And in this case, this is somebody that I know very well and have a lot of respect for, and brings a lot of domain expertise to this particular opportunity.
Thanks, Kevin.
Good evening. I'm Alan DeGraw, the founder and CEO of Post and Track Corporation down in Rocky Hill. We are 10 years old. We provide services exclusively in the healthcare industry. I'm going to assume everybody in here understands the scale and the scope of healthcare based on 6 years of having to listen to Affordable Care Act commercials and political stuff. The company provides what we call information logistics for healthcare management, and that really is when you think about all of the different touch points within the healthcare industry, and there are many, and all the types of transactions, whether they be administrative transactions, clinical transactions, financial transactions, they're all moving from multiple touch points through what we would deem submitters, like healthcare providers and hospitals, to recipients, which could be a number of insurance companies, healthcare-related type companies of that. From a practical perspective, we are a digital delivery service like UPS or FedEx, except we're a little different in that we use technology not only to track where everything is, but we actually peer into the package as it moves over the net and our platform to look to see is the right information in there, is it formatted the right way, is it the right time, who's it supposed to go to, and what's the timing that it's supposed to arrive. So we take a little bit different approach than a package delivery, looking at information, but it's essentially that's what we do. From the company's perspective, like I said, we've been 10 years old. We have a nationwide base of clients. Being here in Connecticut, all of the major plans here in Connecticut, Cigna, Aetna, United, Connecticut are all customers of our company. We interface and support over 120,000 healthcare providers nationwide on their behalf, over about 150 vendors and technical systems as well with our tools and services. The company is focused again on healthcare. We have extremely deep domain expertise in healthcare. We have a great team. We focus on world-class service. Second is we've invested and deployed a very scalable, robust technical platform that's built on 4 core best practices in technology. One is a SaaS, or software as a service operating model, a service-oriented architecture, which means we've essentially built building blocks around services that are reusable. We've enabled that through another technology called web services that allows us to integrate systems very quickly. And last, we operate in a virtual environment, cloud. Everybody's been hearing about the cloud, okay? It's becoming more and more prevalent in healthcare. We moved to the cloud about 5 years ago. On top of that platform, we have a series of suites, technical suites. One really drive what we consider our core competencies around connectivity. You have a broad nationwide base of providers, systems spread out all over the country, different standards, different kinds of transactions, okay? So we built a series of APIs, applications, communication links, protocols all around to address all those differences in the ecosystem. After that, what we've done is on the platform, we've created an integration platform. Those of you who are familiar with Gartner, they would classify us as an integration broker in terms of being able to handle data in real time or in batch and integrate it to multiple different types of front-end or back-end systems. And then lastly is an interaction suite that says how people want to consume, and we talked a little bit about mobile, but in healthcare, everybody wants to consume information a little differently, directly into their core operating system. So we've built, again, APIs that allow that to happen, applications, information that's delivered to portals of different kinds. So it's all about addressing information and delivering it where people and how they work. We drive to our customers through 3 key points. One is healthcare is very complicated, and we're very committed to how do you make it easier to do business with our customers. They're very large, they're complicated environments. Healthcare is a complicated product suite. Okay? How do we make that through technology become easier to do business? Second is, how do you drive velocity in terms of execution and go-to-market? Whether it be opportunities, compliance, reform issues, you have to drive great velocity. And third is, how do you drive great cost efficiency? We're very committed to disruptive economics. And through the SaaS model, our customers don't require additional infrastructure costs or CapEx expenses. So in a lot of IT environments, what you hear it used to be is build and buy. We've added rent. Being in the cloud and in a virtual environment, you can scale up and scale down very efficiently. And that has really allowed us to scale very, very quickly in terms of our traction into the marketplace. And it's a great time to be in healthcare.
Thanks. Pat?
Excuse me. My name is Pat Fisher. I'm the CEO and founder of Janus Associates, which is an information security, cybersecurity consulting company. And I could say, out of all of the companies you've listened to tonight, one of these is not like the others. I'm not a company that's devising technology. I'm a company that helps you protect the technology you already have. And if there was one thing I could say about all of these companies that have spoken here already is, how do you know that your technology is safe or secure? I mean, that's the big question you have to ask yourself. And as venture people, the question you need to ask is, how do I know what I'm investing in is safe? That's what Janus focuses on, to help companies make sure, and governments, to make sure that their data, their information is secure. We're a vendor-neutral company. We sell no products, so our customers never have to worry about us trying to pull something along into the company or the organization that may not be the best solution for the customer. We're also the longest operating information security company in America. We've been doing this since 1988. And I founded it having come from running IBM's Latin American information security program for several years. So I had a good background in this and thought there might just be some kind of a little business there, which we all know there is a little business there now. And you never really know what your risk is unless you ask the right questions and you take a look. And if you don't do that, if you automatically assume that your technology is safe, I almost guarantee you that it isn't. So, you need to work with some organization like mine somewhere in your technological life to make sure that, one, your strategy may be correct, that your policies are correct, that you looked at the technology itself with an assessment to make sure that it doesn't allow a kid in a car to pull out the thing that's in the lighter and disconnect the safe ride, or PHI, personal health information, to crack into something and find a problem there, or any one of these other companies that we could talk about here. And finally, you need to train your people. If there's something I could say about that, you need to make sure that everybody who works for you knows what the rules are. That's your first line of defense. And that's where Janus also works with companies, to make sure that their people understand what they have to do. My own background is from IBM, as I said, with a master's degree in business. My voice is fading, right? With a BA in economics. Thank you.
Thanks, Pat. Fran?
Good evening. My name is Fran Duggan. I'm with Payveris, and we're a digital payments company. And what I mean by that is we sell to financial institutions digital payment solutions so that they can resell them to their clients and customers. But I think what's important that makes us a little different when we say a digital payments company, what does that mean? When you think about it, today I would bet most of the room, if not everybody in this room, has at least one smartphone on them. Some of you probably have, Fitbits on your wrists. The world is digital. And I don't think I have to justify to everybody in the room here that that's the way the world is going. You've heard about the apps. That's what we talk about now. We talk about apps. We don't talk about how we interact with people anymore. It's like what app is coming out next, how do you do it through this app and that app. And I'm on the side, when we look at the payment side, and sitting next to Pat here is interesting because now how do you buy those things? How many folks bank with Google or an Apple or Square who are not regulated, who are not necessarily protected? We all know about what happened with Target and companies like some of those things that happen. But you got to wonder yourself, where are the banks in all of this? That's where we came in, or we're coming in and saying, banks haven't kept up. They're behind. Banks need to kind of get into the digital age. You look at now, you say checks and cash. 10 years ago, they made up more than 2/3 of how payments were done. Today, it's less than 1/3. And we all know there's some things you still have to write checks for, business to business still use that kind of stuff. So how are people paying for things? If anybody here has children that are in their 20s or teens, which I happen to have, they don't carry cash. They don't get cash. They don't understand banks. They don't mind having a card. Everything's about, I need my card. I need to have everything in my card. I need a different way. My daughter keeps a card inside her phone, when like the thing you attach to your phone, the cover for the phone, and that's all she carries. So what else do I need? Maybe she'll throw a license in there, but that's about it. She wants to do everything on her phone. Not because she's a techno geek, that's how things are done nowadays. So where are we in this when we start looking at this kind of stuff? I look at financial institutions and say, if you remember in the old days, why were they even created? Banks were created to facilitate commerce. Back when we were trading chickens and goats for wheat and barley, somebody said, this is crazy. So we created the whole Federal Reserve System, we created banks, we regulate them, we put controls in place, we regulate them in all kinds of ways to protect us all. We talk about Consumer Protection Act. I mean, in some ways it's a huge weight on them, but if you're a consumer, there's something good about kind of feeling like, well, I know that people are watching them. Well, now in today's world, though, are banks really meeting the needs of our consumers, of our children, of you, or your smartphone? No, I still got to go to the bank to do some of these transactions. I want to pay my friend $10. I want to pay my bill. Why do I have to use these things? Credit cards. That's kind of the modern technology. For banks, ACH, I don't know if you're familiar with that, the automatic clearinghouse, developed in 1970. That's the best technology our industry uses to move money electronically. And what is money? I can go to Amazon. I can have a 70-inch screen TV bought, put in my house, and installed today. And do you know what? It's going to take at least 5 days for Amazon to get the money from me. Now, all money is a debit and a credit. So you think about that and you start to say there's got to be a better way. And that's where Payveris comes in. We have a mechanism to move money in real time between financial institutions. Because at the end of the day, when you think about payments or transactions, everybody here, the money starts in an account at one institution, it ends up in an account at another institution. It could be a merchant's account, it could be a friend's account. But if you're paying somebody in cash, they take the cash, they deposit it at their bank. That's the two endpoints. It's all that stuff in the middle where the value gets added. Whether it be credit cards, be it those transactions we talk about, and very slowly, the financial industry is starting to get eaten away by these other competitors, the Squares of the world, PayPal, Venmo, And you may not know all those names, but your kids do. They're using those ways to move money because that's how they work in this new digital world. They don't have the time to go to a bank. They're saying, it's on my phone. I just got this app that says I can pay so-and-so anytime I want. I'm going to use it. They don't think about security. They don't think about their information. They don't think about all that stuff. And I look at it and say, banks are still trusted. They still have regulations. They still, where most people put their money to start with, is there. But they're not providing the right services to their consumers to let the consumers interact in a way that they want to interact today. So that's where Payveris comes in. We're basically providing that technology, that infrastructure to allow people to pay bills, to move money in a way that's different, that's in the digital world, that they can use your phone, you can use the online, you can buy things in a way that doesn't require credit card costs. So if I go to the other side of the ledger, for you, the consumer, credit cards are easy and easy to use. It's killing your local businesses who are paying 3 to 5% every time you do a transaction. And in today's world, we're shrinking profit margins. How do they make money? They're saying it's killing me. You hear Walmart complain about it, but it's not just Walmart, it's all those merchants. We're saying, well, if banks can move money, take out all those middle players, you have the 2 endpoints, we're going to help them with the technology to directly connect these institutions that allows that money and those payments to still be good funds being guaranteed. Take out the risk. Only in sort of credit cards. Take out the risk because you do it in real time and it's good funds and it starts to change the landscape and bring our financial institutions back to where they belong, which is in the center of commerce to make sure we're all safe and your kids don't start buying stuff through Google Bank. And before you know it, they're going to say, guess what? We had a breach, we lost all your money. But Google doesn't care. So that's where we are, that's where our company's mission is to get banks back in the center.
And I'll just, if I could just
Absolutely.
comment on that, because I think Fran has hit on some really powerful themes that are playing out right now, which the banks are not being innovative right now. They're behind the curve. They're trying to keep up with the regulators. If you speak to people who are in those industries who work, I mean, that's how they're spending their time. And you're starting to see some of these banks acquire some of the companies that Fran spoke about, because that's their only way to kind of keep up here. They're not innovating from within. There will be more of those kinds of acquisitions as they try to stay up with the technology curve here. And there's a long list of acquisitions that we could talk about that have happened, and I believe that will continue to happen in that field. I also think that the banks in general, I would say, have been kind of the bad guys in the sense that the way they're making money, draft overcharges, for example, which, you know, for the typical average consumer who might go into a deficit position in their bank account and they need to overdraft for $100 or $50 or something like that, well, they're getting hit with a fixed fee by the bank. So the cost of capital is just through the roof, you know, from that individual standpoint. And the banks make a lot of money off of that. And so that's kind of under attack right now. And there's a number of new technologies. We believe, is kind of one of our core platforms, when we develop this cash flow tool that we're going to beta with right now, that we will be able to do a better job looking out for the consumer, to be able to kind of forecast, hey, you're about to go negative next month or in the next period of time, and to be able to either partner with or to provide a lending solution that will be at significantly lower cost than what the existing bank model has today. So yes, the banks are under attack. They are not innovating. They're trying to keep up with the regulators. Some of that is giving us a sense of security for people who have their money at JP Morgan. It's an institution we feel like it's not going to go away. Some of those institutions went away a few years ago, so it challenges our belief there. But I think the resulting impact is lack of innovation and you know, banks that will be behind the curve in terms of meeting the consumer need.
But there also are some other very onerous issues that banks have. Dealing with the payment card industry requirements is very difficult for banks and for merchants. Consumers don't care about it except when there's a breach.
Right.
But if you can eliminate that, just that set of regulations right there, I think it would be a big help to everyone to make things move faster, decrease the bank's costs,
We believe that banks have your information, there's no reason for that to transmit. When you use a card, all your information is getting transmitted through these third parties and so forth. Part of what Payveris is saying, take them out of the mix. You have your information at your bank, the person you're paying has their information at their bank, and I think the important thing is, all we need is something in the middle that just connects those things without having to pass all that stuff back and forth. That's what we do. So it's safer, it's more secure, there's no risk in the transactions because of the way we do it. It's definitely a different model, but it's going to require the banks to start stepping up. And the analogy we like to say is, pretty soon your checkbook will be like the buggy whip of this century. People are going to say, a checkbook? Yeah, banks continue to innovate how to do check processing. They continue to innovate how you can take a picture of your check. Problem is, nobody's using checks anymore. They need to rethink and get into digital payments and understand how people are interacting, and that's part of what our job is.
You know, we've talked about a lot of things. We've talked about regulatory, changing the use of technology. You guys hit upon that. You hit upon data security, which I was going to go to. Then I wanted to go to recent innovation because I think we've talked a lot about how banks aren't being innovative. So I want to start there and jump that topic in, and if the topic drives into another direction, let's do that. Current financial system regulations impose that banks and other players conduct know your customer kind of concepts, right? So you got to go in, goal of confirming identity of people, open accounts, conduct transactions, very cumbersome work. And we've talked about all of that. Recently, Open Identity Exchange or SPEC Network, they've come up with this whole crowdsourced reputation system on the internet. People on the internet, they basically trust each other. You can basically get a digital reputation. How's that innovation going to impact this financial services sector? And more importantly, can it impact what you guys are doing into that market segment?
Yeah, I'll take a first stab at that, okay. There are companies out there that are using social tools to grade individuals in terms of their credit score. So this sort of plays into the theme that you're talking about, where, you know, they will come up with in part, you know, that score would be based on what you're doing as an individual out on the internet, and they're using that as a factor to kind of weigh in on your credit score. So is there room for improvement in terms of how we provide credit to consumers out there? You bet, you know, there is. I think that the trick is going to be figuring out some of these algorithms, you know, and testing them over time, and doing that at scale, and sort of seeing that there's, you know, results that we can actually fine-tune how we're providing credit. And that's a benefit to the consumer. I mean, you're getting credit at a rate that you should be getting credit at, and you're not overpaying for it. And so I think this will play into that sort of innovation.
But if you're talking about social media as far as, and working with credit, there are many, many ways that can be subverted. And we're going to have to look for mechanisms to prevent that from happening, because that could not only lower risk, it could dramatically raise risk in using that kind of a platform. So that's going to have to be very carefully laid out and maintained.
This is why I can tell you, Payveris, why we're trying to work with financial institutions as opposed to going around them. When you think about social media, these kind of universal logins, you know, you can log in with your Facebook ID or log in with this, and they do try to use, you know, your peers, how you've been rated. And if you think about that, I heard a commercial just a couple of weeks ago of a firm now where you can pay to put all the positive things about you on the internet. And you pay per how many reviews you want to have applied. So when you go buy that thing at Best Buy and you say, look, all these people loved it. And all the reviews are different.
And they're all phony, right?
I'm not saying they're all phony. There's a company that I heard advertise saying they will do that for your company. So, in which common sense you think about that and say, sure, right? So the advantage of financial institutions, because they're regulated with Know Your Customer, is it difficult? Yes. Do you have to pull all that? Yeah. But it's why they're safe. It's safer there than some technology company who takes, you know, sounds good to me, it's easy, I'll integrate Facebook right into my app. You feel good because you've logged in and given a password. I wouldn't do my payments and move my money through that. I wouldn't.
So,
Developers have one focus. That's to get the next app out faster than the competition. That's their focus. Their focus is not to make sure that that app can't be subverted. That slows them down.
I think one of the themes that's kind of playing out is this kind of tsunami wave of millennial individuals, the younger generation, that are pushing the edge of the envelope here. And there's a conservatism that's there in you know, among people of my generation and older that says, slow down, you know, hold on. But these forces are very much coming into conflict, I would say, now, and sort of how that resolves itself over time, you know, that's what's playing out right now. And I think some of the forces are regulatory and they're putting the brakes on, and on the other side, it's kind of do it now, be mobile, you know, no friction, all of those things. So you're seeing some of these kind of what you've referred to in your question, you know,
Mass onboarding, as I call it.
unboarding, yeah, or subverting, you know,
Yep.
the kind of tried and true methods that are out there.
I just think when you get to financial services, heavily regulated financial services are regulated for a reason. Then you look and say, are our regulators really keeping up? Not just with the technology, but who they're looking at. Did everybody here know, you know, PayPal, you're probably familiar with, and how much money PayPal has? They're totally unregulated. They're not a bank, technically. They've been fighting against that forever. These prepaid card companies are out there because they can avoid regulations. They look, feel, smell like a bank, but they're not. And the regulators, I think, need to step up on that side as opposed to keep picking on the ones they're used to picking on and start looking at these other third parties and say, that's where your danger lies.
One of the areas we were talking and it got touched upon, and I had started, and then I got diverted into that first question, was security. But it was, we mentioned cloud technologies, we mentioned mobile technology. How does the impact of those two technologies on the financial services business specifically relate to the security of data flowing? I mean, I think when you talk about the conservative nature of the older generations, I think it's based upon, they don't trust the data flowing through that. But the younger generation has this total trustworthy attitude that whatever they want to push through there is secure and safe. What is being done in between there to make it safe, or is there a big gap there?
Every, and I say every cloud provider would tell you that your data's safe. I mean, they couldn't not tell you that. But they run the gamut of pretty safe to, it's a, you know, a cowboys and Indians kind of an environment. It's your job as a consumer to try to figure out where you're going to put your money and put your data or whatever else you have to put in the cloud. But the cloud is coming. I mean, there's no way we're going to stop the cloud. It's here, and it's going to get bigger and bigger until the next disruptive technology takes
How do
over.
businesses utilize either your companies or you to ensure that when they go into a cloud environment, that it's a safe environment for them?
What we typically try to work with them to do is to figure out what should go into the cloud. For instance, you wouldn't tell Coca-Cola to put their formula into the cloud. Keep that very close to home, tightly locked up. But their email, perhaps, if it's not strategic, might go into the cloud. You know, find out what your core competencies are and your most important assets. Keep those close. Push everything else out and work with it, you know, to make your business more productive.
I'll offer a slightly
Any comments on
counter.
that?
I'll offer a slight counter. And I believe in security as much as anybody, but I can tell you, even as a financial services type of company, I don't own one server in my entire company for anything. We are 100% in the cloud, and I'll tell you why. It doesn't mean when people think the cloud, you just put things out in the cloud. It depends how you use the cloud,
That's
to your
right.
point. If you do that, yeah, it's like anything else. It's like taking your PC and throwing it out to the street. It's taking all your bank statements and just leaving them out there to be read. But if you use the cloud the way it was designed, and you think of it as a data center, there's a data center that you could never replicate on your own with all the security. Whereas ours runs in 4 different data centers continuously, automatic data replication. Put that on that side of the data.
Take that away from you.
Across, 4 different data centers. I'm like, yeah. And I'll tell you what, we've never been down in a year and a half, ever been down, ever. We've never missed a payment, we've never had potential. Everything is triple encrypted because we built our security leveraging their tools, their environment, and the hardware and software they use. You can't rely on the provider to say your data is secure.
Right.
It's how you use the tools to make it secure. The cloud is a wonderful, beautiful thing, and it's going to allow entrepreneurs like us and people. My business couldn't survive without the cloud. My infrastructure cost alone to do what I do, because I'm moving money, so I've got to be 100%, can't fail. I was originally looking at $5 to $10 million just to build the initial infrastructure. Instead, I'll be honest with this group, I pay less than $10,000 a month, and I'm up and running, and I can do as many transactions as Bank of America could do without any failing.
Yeah, I think when you say the thing about the cloud, you assume that the I don't think this helps. I think you assume that in-house security groups are better equipped than Amazon security groups, and I come from security as well, and I can tell you that I've seen a lot of banks who are less secure than Amazon and cloud providers. So I'm not sure I would agree with deciding to put things in the cloud or utilizing a cloud provider would make any information less secure. I would probably argue to the contrary.
And I would just build on that point, because for us as a small company, we have limited resources. And it's all about leveraging those limited resources and making investments in areas where we're going to kind of have our kind of core competency. And it's not about replicating something that Amazon has done in the cloud. Mm-hmm. We're going to use Amazon as our cloud provider. And we have a pretty good, feeling that that's going to provide enough security for us, certainly more than anything we could do on our own. Just to extend that point further, I mean, our go-to-market strategy is really around partnering with very large established companies like Putnam, for example. So we have a lot of reputation on the line if we don't manage their customers well. So that's another sort of checkpoint for us in terms of when we go to market, they're going to be looking at how secure is this thing? What could go wrong, and what's our reputational risk with partnering with this company?
On the healthcare side, it's a little different than banking. You mentioned before about PHI, everybody knows that's protected health information. That's your health information, okay? Cloud's a little different in healthcare. It's starting to become a little more prevalent. However, when we use cloud in the context of a transport mechanism, a calculation mechanism. But we always stress in healthcare that PHI or data never persists in the cloud, which means it's never at rest, okay? So for us, all of the data that belongs to Aetna and Cigna and United is on hardened disks, okay, at rest in a data center, okay? So it's all the movement of the data. We use the cloud for the movement and the calculation to be able to do that. And for us on the security side, it's you take it and you encrypt the transaction, the packet. You encrypt the channel that the packet runs in. You encrypt the disk that the channel connects into, and then you encrypt the facility that all of that is in. So there's multiple levels. And to the point you made before about those kinds of things, cloud has been great for us as well. We use an outside vendor to get great scale. We could never support the size companies that we support if we tried to build a data center or build a cloud infrastructure. It wouldn't work, would never pass. I mean, we get audited by all the big health plans in terms of information protection. PHI is highly regulated in terms of your exposure on that. But cloud really does give you a great virtual environment to be able to scale up and scale down at very low cost to be able to handle volume. But on the security side, what you were saying before is, even for a company like us, is we hired multiple outside groups who constantly test vulnerability. We hire them and say, we want you to try to break it. We want you to try to break it rather than somebody else to break it. So those vulnerability tests are always constantly being done by not only our cloud provider, our data center provider, our consulting partners, everybody's sort of doing that because in healthcare, de facto, the price of admission is security and reliability. Okay, if you have a breach on PHI, it's not only bad for us, but the federal penalties are massive. Okay, and so it's really from the healthcare perspective, it is sort of, as I said, the price of admission is something you have to rely on and really pay a lot of attention to. But the cloud has just been a terrific environment. But like I said, it's still a little early in healthcare, and people are starting to adopt it a little bit more. But it is a great environment.
But what you see here are two different people, two different businesses who've taken they have managed their risk to the level they feel is appropriate. But they have thoughtfully gone in and looked at things and thought about how to secure their data. That's the key, not just to throw it out into the cloud and say, okay, it's a cloud, it's serving a lot of people, it must be safe.
So let's bring that into a different angle. We tend to deal with companies of all sizes, and the early stage companies and the growth companies that are trying to attach themselves to all this opportunity have very limited expenditures to spend on security and other things. How do you talk to those companies about what should they prioritize as they develop that company that's going to be either accessing information or banking information? How do they prioritize what they're going to spend because they don't have unlimited resources of bigger, more well-established?
Even the largest companies don't have all the money that they could or should or want to spend perhaps on security. Well, not want, but could or should spend on security. But if I would pick one item that everyone should focus on, it's training your employees so that they understand what they're supposed to do as part of their responsibilities. That's your first line of defense. I mean, once you've got if you're in the cloud, you've got the data safe in the cloud. But unless your employees know what they're to do, how they're to do it, and follow processes, you're going to be at risk. Because processes are the hard thing. It's not buying a device or putting it out into a cloud. It's following a procedure over and over, day after day.
To that point, in a company like ours, we have every single year. You're all familiar when you go in your doctor's office and they make you sign that HIPAA waiver of who you can share information with. Well, HIPAA defines a lot of who can share information with whom and when and how that all happens. But our entire company has to go through certification every year that we understand and sign off that we understand what the rules around HIPAA are. Okay, so you're right on that. There's some things again that you have to do. But to your point with small companies and prioritizing, I know for a company like ours, we were very fortunate that out of the gate, Cigna was our first customer. So we didn't start with a small plan. We started with a very national plan, very complicated. And if we could not have met the security and reliability requirements, we would have we wouldn't have gotten, we're now 10 years in, we wouldn't have gotten past 2 months, okay? So that was absolutely a priority for us. And early on, the decision was, because I have had other companies where I built data centers, it was absolutely a non-starter. The only way to do it, to be able to scale it and meet those requirements, was for it to be a checkoff. And so it couldn't be that we would go to a small little outsourcing company. It had to be a known name. So when the security professionals in those organizations said, oh yeah, they use so-and-so, we know them, check. Because otherwise it becomes an impediment to doing business. You have to convince them that you know how to handle this. And for us, the first thing was we had to take that off the table, which was they walk in and said, oh, you're dealing with them, we know them, check. So it was never an impediment to doing business.
And that probably wasn't the cheapest way you could have gone.
No, no.
You paid a price
there
for having some
were
security.
less to do that. It was obviously a lot more expensive to have built it ourselves.
Right.
And the other part of it is too is there's just not enough time to ever build these kinds of infrastructures for small companies. You can't build.
Going against the clock, I want to get some questions from the audience. I know we have one here.
Yeah, hi. So I have questions for the panel and everyone here. So we're all innovating inside of one of the highest regulated spaces, right? And I'm in a strong opinion that regulation actually increases insecurity as I can promise I can show you how you can actually go to the exchange, execute a large trade as like pretending to be any large financial institution, or even create fake market data. And a lot of times they don't even use passwords on fixed messages, right? How do you guys deal with so much, innovating with so much regulation? How big is your legal department?
Well, for us, we're a small company, so we're still very much in the early stages of developing this business. As I mentioned, we're in beta right now, so it's not a commercial application that's available to the public. But we have done similar strategies as to what Alan has talked about. I mean, both on the, we aggregate financial data. So we've gone to probably the largest aggregator that's out there, a company called Vogel, that does it for all of the large financial institutions. They're a known name. They've been doing it for 15 years or so now, and it is a kind of check the box kind of process because they're doing it for every major financial institution out there. Then on the go-to-market side, we're also partnering with firms that have a very strong reputation in the marketplace. They're concerned about protecting that. So they're doing their own vetting of kind of where we are and what we bring to the table to make sure that they are comfortable. And we're able to in part address that through the partners on the the building of the technology side. So I think this is always a balancing act, and as we go forward, I mean, we obviously have outside legal counsel that's got tremendous domain expertise, and we lean heavily on that individual and that staff of people to guide us on particular roadblocks or issues that we come up against. But for a while, it's not going to be a skill set that's going to be internal to the company. Eventually, that will be the case, but right now, that's not the case.
Yeah, for our company, we don't have a legal staff. I have a lawyer for everything though, but we don't have a legal staff. And I think it's one of the best and most important investments that any entrepreneur is going to make. And I don't care whether it's a transaction lawyer or a HIPAA lawyer or whatever, get the best one you can, okay? But we rely on groups and attorneys that are specialists. There are people we work with in Washington, D.C. I've worked with for 25 years that, for good or bad, he can recite HIPAA. You talk about it, he's lived his life in it. He knows it. He knows the High-Tech Act. He knows the Affordable Care Act. I have somebody new on my board who was a former general counsel of one of the major health plans here. Okay, he understands the operating environment in those organizations of what are the critical legal issues that we need to address. There are all those resources that are available. You don't have to have them. You don't have to have them on staff. It's not good because I think as a small company, you really need experts in a lot of different things. Okay, and whether that's a single firm, I don't have a single firm, or whether it's the best you can get in each one of the cases that you need. I've gone that route.
Do we have another question? I thought I saw someone else's hand raised.
I was just going to make a comment on, in terms of security, is for large financial services, instead of seeing security as an after effect, what we do is think about threat modeling and thinking about security embedded in the development process, so that you don't have to rely so much on the vulnerability assessments or the reviews after the fact, that you're already coding securely, and you're implementing your cloud, your Amazon Web Services properly, so that you don't have to spend the time and money after the fact to become secure.
I would say on that, for us, we did that as a function of, as we put our platform and stack in place, okay? But for us and in healthcare, no matter what you've done, you have to have it after the fact that no matter what you did, there's somebody smarter than you, and you still have to do those vulnerability tests. I know our customers, if I just said to them, just trust me, we've done all these good things, and I showed them our development side and said, can you give me your SOC audit? Can you show me your vulnerability test? Can you give me your disaster recovery process of what this goes down? These are mission critical. I was like, we did all that 10 years ago, I would have a bad day.
But you're both right. I mean, anytime you're building an application, build it in up front. It's the cheapest place to do it. I mean, it may slow you down a tiny bit in the length of the whole thing, but it's going to save your skin somewhere down the line. But obviously, anytime you have, when you're with HIPAA, you're going to do assessments the rest of your life. I mean, that's.
And I will say also is customers are a great place to show that, particularly for small companies. There's a very, 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 very large health insurance company that's not very far from where we're sitting. That early on in our contract with them, one of the requirements they made was a certain kind of certification for us to do. And it was the wrong time for us to do it, whatever. But we wanted to do business with them, and we did it. And it really has been a major positive on our company, because now when everybody comes, everything that has to do with security and infrastructure and all those things is in one place. And so, you know, sometimes when big companies and customers want you to do things, yes, it's important because they want it, because they don't want to have the risk. But for us, even though, again, it was bad time, it was a big investment of people, time, and resources to be able to do it, it really turned out to be a major advantage for us, for them to essentially, in a nice way, force us into doing that. Right. And companies will help their partners, their young companies, if you're dealing with them right, help do that. All of our customers have helped us in one way or the other, because they don't want the risk exposure. If they like what you do, they want you to be good, because they don't want the risk exposure, and they will help you. They'll help you identify those things to do it. So on some cases, the regulation and going through that has been a very, very positive thing, because it's really makes companies codify what their requirements are and what they're going to do if, in fact, there is a breach or there is a problem. I think it's been a very positive.
And one of the hottest areas in the information security marketplace right now is third-party assessments of business partners.
Yeah, going with that theme, yeah. So, in turn, in your opinion, how do you create a level playing field? So I don't want to. I guess my point is, so you think about large providers. We have SOX, we have BCI, and those are very standard processes. And to your point, sort of that checkbox mentality. And you know, as someone who consumes lots of applications, kind of like you were describing, banking, some of them financial services, some of them just to share videos and pictures, how do we create sort of a regulatory environment that we can feel comfortable, to your point, sharing this information without the, as you're describing, sort of you went down this path because you had to do it for a customer, which is great. And I think that probably led to acceleration growth of your business that you probably wouldn't have experienced otherwise. But how do we create a platform that says this is the SMB or this is the entrepreneur model for growth? Because from a large organization perspective, I wouldn't say it doesn't work, but it's there, and there's at least a level playing field, and we can at least feel comfortable, to your point, putting my money with JP Morgan or putting my money with Bank of America. But as we talk about a lot of these new technologies, it is a little alarming that multiple players are entering, and what are the rules?
I think, again, for us, and I think for small companies, it's picking the right partners. And to your point before, which is sometimes you pay a little bit more for that, but you have to pick the right partners who can bring that expertise to you. You know, in our cloud environment, in our data center, we partnered 10 years ago with the right group, and we've just grown through that.